Good afternoon, everybody, and welcome to this week's macroeconomics analysis session for October the 1st, 2015. Let's get underway. And first, as always, our disclaimer: the content of this presentation or any other Elite Traders Club material, or indeed any Elite Investors Club material, does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, nor particular needs. Before making an investing decision based on the general advice presented in any of our presentations, please consider whether that advice is appropriate in light of your financial circumstances. Good afternoon, Jeff. How are you?
I'm good, thank you, David.
Fantastic. The week in review. Not a lot of data out this week, Jeff, other than a whole lot of people speaking in the US.
Yeah, that's right. I mean, a little bit lighter in general this week, and then running this webinar a day earlier than usual. It means we've missed out on some things. So I'm just going through what we've got. Building approvals in Australia slumped, but I mention all the time it's a pretty wild number, and it was strong last month, so I expected it to be weak this month. Retail sales out tomorrow. Chinese final PMI actually came out minutes ago.
Yes.
Came in 47.2, in line with expectations, a little bit higher than the flash numbers. So just not a huge sign, but at least things aren't getting worse in the last sort of week or so, which is a little minor boost. In the US, the only real numbers out, consumer confidence up again, which is really good to see.
Because that figure was also revised too. I think the initial figure was around 92 or something like that.
Yeah, exactly. So a big improvement now. We're basically at the highest, sitting around the highest levels we've seen since sort of before the GFC. And then on top of that, like you said, a lot of American a lot of the Fed members talking. Yellen is yet to speak. But there's been a few speeches out already, and one of the members basically got up there and said, we need to see a rate hike this year. So interesting just to keep an eye on the language. But nothing sort of out of the ordinary, really swayed me one way or another. But Yellen will give a little bit more indication on that as well. The Tankan Index came out with manufacturing, non-manufacturing data. There's two parts to it. One was a bit better, one was a bit worse. It's kind of like a business confidence survey. Overall, a minor positive there. So not game-changing, but some minor positive there.
So the Tankan wasn't tanking?
Correct.
Okay.
It was rallying.
Very good. All right, well, let's go and have a look at what's happened on the markets this week in terms from a technical point of view. Certainly yesterday, very strong day on the market, Jeff. Very, very nice, strong candle. Really trying to hang on to that 5,000 area on the ASX 200 at this point in time. The story still remains. We've got a series of lower peaks, so from a technical basis, still very, very weak. This market's got a lot of work to do to, I think, really gain that strong foothold above the 5,000 level. We're still in extreme risk territory, so again, remember, if you've been stopped out of any of your positions from a technical point of view, you don't want to be adding any more trades to your portfolio unless you are under the required value at risk level parameters that our market risk model dictates.
In any case, the ETC scans haven't come up with a new Aussie trade in a few weeks.
No,
I think.
Absolutely, so. And that's one of the bits of feedback that we get from the market, that the scans actually talk to us and say, well, look, there's nothing actually out there, and not just in terms of quality, but just in terms of quantity of particular setups that you need to scan through again to shortlist. It's just getting smaller and smaller, and so obviously that all that long trend, the upward bias, etc., is really disappearing from the market pretty quickly. Let's go and have a look at the US S&P 1500 in this particular case. Again, it's just finding a level of support around about that 435, 430 level as we speak. Interesting, again, last night we had a very strong night on the markets. Really just sort of up and down at this point in time, depending a fair bit on what comes out of the Fed in particular. What sort of rhetoric, how the market's going to interpret that. Still don't think we're out of the woods by a long shot yet. And certainly this old support level, we've tested it a couple of times now. The more times that we test it, I'm really going to be interested to, obviously the more times that we test it, the weaker it becomes. So I'll be interested to see what sort of a movement back up we get before we roll over and turn down again, if indeed we do happen to do that. If we do happen to roll over, once again, it's certainly not a very good sign, because we'll have a series of more significant peaks coming down at this point in time. So certainly we're well below our sort of bull market, bear market filter, which is a longer term moving average, a 200 period moving average. And at this point we're in very high risk, bordering on extreme risk as well. So again, it's just a matter of keeping your capital dry. We don't want to be in the market just for the sake of it. It makes sense to protect that capital. There'll always be plenty of opportunities further down the track. Right, let's go through and have a bit of a look at what's coming up next week. Jeff, the important sets of data to be keeping our eye on.
Look, in Australia, I mean, obviously all eyes are going to be on the RBA. Yep. A rate meeting, interest rate meeting next week on Tuesday. It's almost certain that rates are going to be on hold again. No surprise there. Yep. Just be interesting to see if we get a little bit of language change, because I think there's a chance that we could see a November cut. Mm-hmm. And the RBA likes to give a bit of notice and shift a little bit before they make a major step. They don't just like to say rates are all fine and then suddenly just cut them or raise them on you. So I actually think we might see a bit of a language change, and I think there's an increasing chance we'll see a November rate cut. In the US, again, that's also about rates over there. So another 5 speeches from FOMC members, really stepping up ahead of that December meeting where we think they will raise rates for the first time.
Yep.
Other than that, the trade balance data over in the US is the big piece of economic data. At the moment, the market's expecting a trade deficit about the same as last month, about $42 billion. Mm-hmm. I think it could be worse than expected. So I think that might surprise the market, might move the US dollar around a little bit at the end of next week. Over in Japan, an interesting one. I've been talking about this for a few months, saying I thought later in this year, I still think that Japan will announce some more stimulus. They've had a lot of focus this year on domestic issues, some changes to their sort of military rules and things like that, and I think they're going to want to get the conversation back on the economic front, show that they're doing something. I think the next budget will see plenty of spending from the government, and I think you'll see some more monetary policy easing. So I think in this quarter, so I think in the next couple of months, you're going to see some big news out of Japan.
Yep.
And Canada as well. Trade balance could move a sort of similar thing to the US. I mean, Canada's might also sort of slump more so on the back of commodities.
Yep.
Really struggling in recent weeks.
Yep. Okay. Just a question off the cuff there, Jeff. Japan over the last 3-4 years has done a lot of stimulus. Comparative wise to the US in terms of GDP, etc., and amount of stimulus, who's had more stimulus, the US or the Japan?
Still the US.
Still the US, yeah.
Yeah, the US has been bigger and broader.
Yep.
The Japan is probably probably less monetary policy stimulus. They've probably gone down the route of more fiscal stimulus as well. So obviously tinkering with government spending and taxes and things like that.
Yep.
But they've obviously had significant, monetary easing as well.
Yep.
But that was really the number 1, 2, 3, and 4 tools in the US,
Yep.
where it's probably a bit more of a piece of the puzzle in Japan.
Sure. Okay. Thanks for that. Just on the slide there, I just was curious the other day having a look at a little bit of news, how September or the last day in September fares historically, and the the slide here shows that the 30th of September is typically a very bearish day on the markets, and the amount of times that it's had a negative day on the 30th of September has occurred 50 times in since the last since 1945. Against that backdrop, last night, the 30th of September in the US, we had a nice big white candle, so going completely the opposite direction. So let's keep our fingers crossed. That's a sign of good direction to come. Certainly we'll have to wait for it to occur, Jeff.
No, I'm actually a little bit worried, Dave, because what we've got is the last 5 of the last 6 years, we've seen some losses on September 30, and that's been in the middle of a big bull market. So if we've got a big gain on September 30, that makes me a little bit worried about what market conditions might be. But no, it's also you do tend to get unusual moves at the end of a quarter, end of the month, end of financial year, etc.
Yeah, we were talking about this earlier, weren't we? The whole window dressing sort of concept with some of the larger funds. And particularly, from a technical point of view, the market has been very bearish of late, and so there's obviously a bit of short covering as well. So again, this is one of the difficulties when you look at on the short side of the market, that you can get bear market rallies that are very, very savage, and you've got to be very, very careful when, particularly in the early stages of bear markets. So until the market really understands, okay, well, the party's over, you can get that huge volatility and makes it very, very difficult.
Yep.
All right, well, that's it for this particular week, folks. Just a reminder, 9 a.m. on Monday morning for those of you in the Elite Traders Club, catching up for our weekly analysis session. But that's it from me.
And that's it from me.
We'll catch up with you next week. Bye for now.
Thank you.